Hey traders, Mike Sir here. Welcome to my weekly trader psychology live stream series where I help you with the mental side of trading. All right, today we have an amazing show for you today. I'm going to share with you on the topic of not taking profits early. All right. Um, I'm sure all of you who've been trading for some time or have trading experience, including myself, where you get into a trade, it's profitable, and you see this profit, this nice profit there, and you hit the exit button or you sell the position and you say, oh great, I made X amount of dollars. You're happy, you're satisfied with it, and then the trade keeps going in your favor to a point where you could have made even more money or sometimes even double or triple your profits over a longer period of time. And you're thinking to yourself, oh man, why did I sell so early? Why did I take profits so early? Or you get into a scenario where the market's really volatile. You see, let's just say you bought a particular stock to go up, and you're starting to see the market go down, and you start to see the stock that you're holding start to go lower. You say, oh, you know what? Let me sell right away, and then sooner or later the market recovers or your stock recovers, and it keeps going higher. So what have you guys been in a scenario where you basically take profits way too early based on your initial estimates, or you're telling yourself, oh, once I get into the stock, I'm going to hold it long term. I'm going to hold it, until it reaches this price, or I'm going to hold it until it reaches, a certain amount of return before I sell, but only to make emotional decisions and say, just because maybe perhaps if you're fear of losing the profit, or the fact that you're fearful that this profit might actually turn into a loss, you basically get out way too early. Well, I've been into those scenarios. So what I want to do in today's live stream is I'm going to share with you how to manage your taking profit scenario so that you don't take profits too early. All right, let's get into it. All right, so just a normal disclaimer, please consult your financial advisor before making financial decisions. All right, let's get into it. So first thing of all that I want you guys to recognize is when you take your profit, the number one thing that you should be thinking of is you can never really truly sell at the top, and can you never really truly, like, let's just say if you're bought, you can never truly sell at the top, right? Because we don't know, you're trying to predict the markets. So first thing of all you're really trying to do is try to maximize the profit that you are expecting, right? So first of all is, whenever before you get into a trade, you're thinking, well, I'm going to sell once it reaches this price level. So it could be some form of a resistance level. I'm going to sell before it reaches the resistance level, or I'm going to sell once it breaks the trend, right? Whether you're buying or whether you're shorting, once it breaks the trend, then I get out. Or once I try to maximize the profit until perhaps some major event that could reverse the position that I am in. So, for example, if you know that Fed Chairman Powell is going to be speaking on Wednesday, sell the stock before Wednesday, right? Because you don't know what's going to happen, or perhaps the company that you're holding is going to be reporting earnings on this particular day. Well, sell before it, because again, you don't know whether the results are going to be good or bad, right, against you. So have an idea exactly, like, what is your trigger point to sell, right? To exit that position. Now, you could be thinking, well, yes, those are the key triggers for me to sell, but it could go even higher, right? Again, especially if you're buying, it could go even higher. So, but have an idea. Well, what's the target that is target price that you're looking to sell at, and what is the trigger for you to exit that position. Because again, we've been in scenarios, and again, including myself, okay, I will be the main example, in terms of sharing these experiences where I'm watching, my position. Okay, it's going in my favor, right? Let's just say I'm buying, right? Again, it's going up, and then I start to see, oh, you know what? The market's starting to be really volatile right now. It's starting to reverse towards the downside, and I see my stock not move yet, right? And maybe it dip a little bit, right? But it hasn't reached my target price yet. And so I started thinking, is this a day trade? Is this a swing trade? Is this a positional trade? So then my initial objective, let's just say, is a swing trade, right? Until it reaches a certain price level, like much higher than where it is at. But I'm influenced by what's going on in the market right now, right? Because it's going up and down and all that stuff. So I get nervous. It hasn't really reached my target price. So emotionally, because I see it and it's starting to go down, right? Naturally, you would want to exit, right? And sometimes it does work where you're looking at it and you start to see it go lower, and so you immediately sell, and then it did go lower, right? But only if you were looking for a much higher time frame. It could be just a little bit dip intraday for you, and then resume its rise. So that's the scenario that I want you guys to avoid, where you're making, emotional decisions not based on the analysis that you made. Like I've had, and again, maybe you guys think about this scenario where you're not looking at the markets. You get in, you know your stop loss, you know your take profit. You don't do anything. You just let it be, and you go do your other things. And then next thing you know, oh, hey, it reached my take profit, or hey, got stopped out. So those type of scenarios where you didn't do anything, but there could be scenarios where, because you're watching so intently, right? Every minute by minute, second by second, and you think, oh, it's going down. Oh, it should sell. Oh, wait, I'll get back in. Oh, wait, I'm, get out, in and out, right? So you're trying to kind of, play in a way that you're in a scenario where you might be taking profits way too early, or you're over trading, right? Because of course, nothing's going to go straight up and nothing's going to go straight down. So that's where you don't want to let your emotions impact you in that way. So a couple of things that I want to kind of just share with you to help you not make these emotional decisions on, again, taking profits way too early. So as I mentioned to you, have a target in mind. Now, there could be other scenarios, like I mentioned, resistance level, and also look at your risk to reward ratio. Now, if you see that this trade has a risk reward ratio potentially of, again, at least 2-to-1, but maybe at least, maybe it could reach 5-to-1, for example. You're risking $1 to make potentially $5. And you see that there's no clear resistance level until it reaches this level. So then, in that type of scenario, before it reaches that, you should be selling, right? Because it hasn't reached, maybe it's gotten to 3-to-1 risk to reward ratio. Well, why should you be selling? Because it hasn't reached that. Now, obviously, sometimes if let's just say we shoot for the moon, like 10-to-1, which the probability might not be as high versus, let's just say, 2-to-1 or 5-to-1, right? For example, but maybe it can. But how do you protect yourself if it doesn't? So that's where you could look at saying, okay, well, I'm going to take half of my profits once it reaches 2-to-1 or 3-to-1 or my first level of resistance. And then I'm going to try to ride it higher. Okay. Now, what do I mean by that? So you take half of your position off. So let's just say you got 1,000 shares, take 500 shares off, right? You locked in your profits. You could do two things. One is set your stop loss break even. So no matter what happens, you at least made profit, right? Half of your profit. Number two is you could, after monitoring it, let's just say it continues going higher, for example, then move your stop loss to your original first profit target level, then if it does go lower and reaches that, then again, you just basically exit it at the first resistance level, right? Or first take profit level. So, it's not a big, right? It's not a big deal, right? So you locked in, your profits. Now, if it goes higher, right, keeps going higher, and what you do is you have that second take profit level, right? And again, let's just say it reaches that, then you would have made a little bit more money on half of your position, right? So this way, because it goes back to what I said earlier, you just can't predict the market, right? You can't predict it to sell right at the peak, right? You can take profits along the way, right? Or take half, or take 1/3, or 1/4, right? Whatever you feel comfortable with, but that way you're steadily taking profits along the way, versus you saying, I'll just sell everything, right? And then what if it goes higher? Now you could be saying to yourself, well, I sold half, but then it went lower and went back to break even. Then you say, oh man, I should have sold at that first take profit level, and now I only have half of my profit. Well, you can't say that. Did you know that it would only go to that first resistance level? What if it went even higher? Right? Or what if it's a scenario where you don't take profits in first take profit level, and then it goes back to break even, or worst case, this is not what I advise, is it suddenly hits your stop loss, right? So we don't know. So this is where you have to be comfortable with the fact that you just cannot predict your profits. Like, you can predict how much you would lose. Like, if you say, I only want to lose no more than $200, or $100 on this one trade, you can guarantee that, right? Because of your stop loss level. But can you guarantee me to, before you get in your trade, I am going to make at least $1,000 on this trade? You can't, right? Because then you're predicting, right? It could be you make $2,000, or you could make $500, or you could make only $100 on this trade, right? So my point is, have some parameters in place for you to minimize. Well, first of all, number one, minimize the risk first, right? Once the risk is eliminated, then any type of profit is gravy, right? So use a couple of things. Again, I was mentioning earlier, the levels, right? Resistance or support levels, depending on what you're buying or selling. Look at your risk reward ratio. Look to see whether there's any type of event or catalyst that could trigger the price to go against you. Look at your trend lines. Look at your technical levels. Maybe the stock's already in an overbought scenario where, okay, now, yes, it can stay overbought, but you should start looking to take some profits off the table, right? For example. So a lot of things like that. A couple of other things, okay, I marked down here, is, let's just say you're a very emotional person. You say, oh, I just can't, stop using my hand to exit this position when I see a profit, right? Let's just say you're shooting for $1,000 profit, and you see, oh, $500 on your screen right now. If you hit the sell button right now, you make $500, right? That's just where, again, don't be emotional. Apply what I talked to you about. The other thing is to not use market orders to exit your positions. So always set pending orders. So if you bought and you're looking to sell, use sell limit orders, so that once it reaches that level, then it'll automatically sell for you, right? Then that way you don't touch the orders. You don't touch the buy or sell buttons. So then you won't be emotional about it, because it's either going to hit your take profit, right? Trigger the sell limit order, or it doesn't. Now, obviously, in a scenario where maybe the stock gets really, really close to your take profit, your sell limit order, and now you start to see the price go lower, then okay, fine, right? If it's close enough, just cancel the sell limit order and hit the sell market order, trigger you to exit your position at a profit. So those type of scenarios will help you. So that way you're not emotional, about that. And I think some of the things that has helped me a lot, when, especially in my early days, is where I really take profits way too early. Then I just started using all these pending orders, and I would, cross my arms while I'm watching the markets, and I don't do anything, right? And then quite frankly, quite a lot of times it does trigger my take profit or even go higher. But and there are scenarios where, of course, it didn't reach my take profit, and I said to myself, okay, I'm looking to sell, but it hasn't reached my sell limit order just yet. But okay, I can't touch it. And then, sometimes obviously it doesn't reach your first take profit, and then it reaches back to your break even, right? And then you exit without any profit. So there are scenarios like that do happen, but if you always try to let your profits ride, right? There's a saying: cut your losers quickly and ride your profits, right? Or maximize your profits. And this is why, especially if you are trying to make more profits or more money from the markets, you have to let your profits ride. All right. The other thing, last thing before I take any questions, and let me know any questions that you guys have. Type them in the question box. Is you guys can look to use trailing stop orders. Now, what do I mean by that? Is if the brokerage firm that you're using has an option for trailing stop. So a trailing stop could be two things. One is a dollar amount or a percentage amount. And obviously, I usually use the dollar amount. So what it does is has in terms of the trailing stop is has it goes in my favor. Let's just say if I set the trailing stop to be, for example, let's say 30 cents. As the price goes in my favor 30 cents, the stop loss will be moved up 30 cents. As it keeps going higher in my favor 30 cents, the stop loss keeps going higher. So it locks in your or locks in your profit and moves up your stop loss level. Okay? So let's just say, for example, you set your stop loss right down here, and your entry and you set a trailing stop of 30 cents. Again, as it goes higher in your favor, it just moves up the stop loss by 30 cents. So that has helped for some people. And again, especially if you're not watching the market all the time, it helps you kind of minimize your or lock in a lot of your profits. But the other thing is you do have to have a scenario where if the stock that you're trading is very, very volatile, it could just shoot up, move up your stop loss 30 cents, shoot down, trigger you out, and then go up in your favor, right? So generally, if you were to use trailing stops, definitely use them more on less volatile stocks. That way, you're not kicked out that quickly. All right. Yeah, I think that's pretty much it. I mean, the last thing, again, before I take any questions that you guys have, is it is very, and again, I want to state this very clearly to you guys, is it's very, very important that you don't take profits early, right? Obviously, but I want to emphasize the reason why is when you do your due diligence, when you do your research, when you do all your analysis, and you do find a good opportunity to get into at a very good price, okay, whether you're buying at the bottom, near the bottom, or you're trying to short at the top. If you get in at those positions, don't exit your profits too early. Like, for example, if you were to buy any stock in March of 2020, okay, at the peak of the pandemic, where the market was crashing, it didn't matter what type of stock, what type of asset that had dropped to that level, and afterwards you would have looked like a genius, right? Because that was really the bottom. For you, to just get into that trade, and then let's just say you made a 10%, maybe 20% profit, for you to exit at such a good entry price and not, and yeah, right, for you to, take that 10 or 20%, which is fine, right? If that was your objective at the time. But if you were looking at this a little bit longer term, and again, I'll say long term, I'm not talking about years, right? I'm talking about maybe, months or more or less than a year. If you were able to just hold on, you don't need to do any trading. You don't need to get in and out of any trade. You could just basically buy it and hold it and let the profits roll in, where you're like, like just crossing your arms, and the markets, the instrument that you got into is making money. It's going up in your favor, right? And again, I've seen so many scenarios, and again, including myself, I'll be the best example, where I get in at such a good price, but I can't resist myself. I say, "Oh, I got a few $1,000 profit, take it," and then next thing you know, it could have been $100,000 profit, right? And then I'm kicking myself. So that's why I want to emphasize to you: if you think that you got in at a very good price, try to hold on to it as long as possible. Okay. And again, nowadays, I have scenarios where I trade less, but when I do see scenarios where I get in at such a good price, I try to hold on to it as long as possible. That way, I'm not really trading like some people, ask me, Mike, are you trading every single day? No, I'm watching every single day, but I'm not trading every single day nowadays, because once I get into a position, and I get into a decent sized position, if it's going in my favor, why do I need to find another opportunity, right? To get in and out for, small profits when I got into such a good position. I mean, it's obviously not going to go in my favor every single day, but as long as it's going in my favor, I don't need to do anything. Right? I don't have to. I'm not affected by the emotionals, of the markets up and down and stuff. I got in at such a good price. I can afford to relax and be able to ride out, any type of storms, right? Because I got in at such a good price that either way, I would probably, well, I mean, not probably, I would have made money already, right? Or at least not lose any money. So again, that's why I want to really emphasize in terms of this topic, like in terms of taking profits way too early. It's not just because of the markets. It's not just because of your analysis. It's not just because of, what, the instrument that you're trading in, or the stock that you're trading in. A lot of the times is we self-sabotage ourselves, is that we exit way too early when a position is already working in our favor, versus the other thing that we keep holding on to losses, right? That's a funny thing. Right? If you think about this psychologically, why would we exit something that's working in our favor and hold on to something that's not working? Does that make sense? Right? Because we don't want to take that loss, right? Or we exit with at least a profit, right? But we're not, shouldn't we, like in here, thinking, okay, if it's something is working and making money for me, why would I want to exit too early? If something is losing money for me and I keep holding on to it, it keeps losing me money, why would I want to hold on to that? Right? Think about that. All right, guys. I'm going to take some questions for you, from you guys. All right. There's a person, Maria. I appreciate your education for us, and I appreciate YouTube allow us people who are knowledgeable like you. Okay, thank you very much. Richard, hi, Richard. How are you doing? Hope you're doing well. Dennis as well. Hey, Dennis. Haven't heard from you for a while. Hope all is well. And David as well. Yeah, good seeing you guys. So great. Thank you for you guys. For supporting me on this live stream. I hope you guys are learning lots here, because again, I have lots to share with all of you. All right. Then it says, learning the historical behavior of the market helps settle your nerves to take a profit. Okay. So, yes, it can help you. So, for example, I mean, the best case scenario is if you are, let's just say, not very, very active. Okay. And again, when I say very, very active, I mean you're getting in and out a few times a day or a few times a week, type of thing. If you're kind of like a positional trader, right? Look at the charts in 2021. You can see straight up, right? Very steady, not too much volatility. But look what happened. Okay, obviously 2022 more down, right? But look at what's happening in 2023. You got a big sharp move up in the early 2023. Now recently we've had a big drawdown, right? And now we're going back up. So if if you look at the market behavior in 2021 versus, I won't use 2022 because it's more predominantly down, but let's say I'll use 2023. Which market behavior, which market environment is more volatile? Well, of course, 2023. So if you start to sense that this volatile market is starting, I mean, this market's starting to be more volatile, it is signaling to you as like more of a positional trader, like trying to ride it steady up, that the market dynamics have changed and maybe that's not going to steadily go up in your favor. So therefore, you should look to at some point, take the profits off the table because you're going to have extremes, right? And it's not saying that it's going to go against you, go lower. It could go lower and shoot up, and then go lower and shoot up. That's not the type of environment that, again, has a positional trader would benefit from. Those type of markets would benefit from very, very shorter term type of trading styles, right? Like volatile up and down one day, sorry, up one day, down one day, or intraday up, down, right? Up, down. Those are great for day trading, right? Because you're just, right? You're just trying to profit on that day. So whatever happens tomorrow, it doesn't matter. But for swing trader or positional trader, it gets very, very difficult. So that's why you have to know your style. If you know what your style is and you see the market behavior and market dynamics change, that's when you, again, this is not the, like you should say to yourself, this is not the market environment that would be suitable for my style. So therefore, I'm going to take my profits off the table. Okay, Richard says, I used to aim for unrealistic profit targets. I failed, obviously. It took me about 6 months to realize setting a reasonable risk reward, such as 1.5, makes me profitable. A balance win rate plus risk reward is the key. Yeah, couldn't agree with you more. Now, one thing that I will add, Richard, is you got to kind of know the type of instrument that you're trading. Like for you to expect like a 10-to-1 on a stock that is not moving much, or has on an instrument that is not moving much. And let's just say you set wire stops, right? For example, you're not going to get that, right? You're not going to get 10-to-1. And for you to aim for that, let's just say you try to aim for it, it just goes up a little bit in your favor and then goes back down, right? Or it goes up and it goes back down. Like it never reaches 10-to-1 or even remotely close to even 5-to-1, for example. Then you should understand what's the instrument you're trading, what's the volatility of the instrument, and also is this a momentum type of driven stock where it only has a momentum for a few days or maybe only for a few weeks and then it kind of falters, or are you trading something that's steadily going up, right? For example, or are you trading something that's up and down, right? So understand what it is that you're trading and then find something that is suitable. And there's nothing wrong with shooting for bigger risk reward, because if you want to make bigger profits, obviously you need to shoot for bigger risk rewards. But what I would suggest is that if you're shooting for that, you got to trade a certain instrument or trade a certain stock that has that potential, right? And for example, it could be that you've identified a certain hot sector, like earlier this year, or mid this year, everything related to AI. You saw it shoot up. Yes, I had a stock that I got close to not 10 to 1, but close to 6 to 1, right? Just because I was in the right time in the right sector, and then it just shot up and allowed me to get that, right? But don't shoot for look at historical patterns, look to see what is possible, and then reassess your realistic profit targets. All right, David says if you get a signal based on your profit strategy, but the signal shows 30 minutes before a high impact news like the non-farm payrolls, do you take the trade? Okay, very, very good question. Again, there's no right or wrong, but if you were to say to me, okay, I'm not a risk taker, I want to be more certain, then generally you wouldn't take the trade. Because again, at the end of the day, you don't know what the NFP, non-farm payroll number would be, or how the market will react. Sometimes the market, let's just say you bought 30 minutes before, you got in at a pretty good price, and non-farm payrolls, and then it's positive and it shoots up, right? So you make even more. But what if it's a scenario where it suddenly shoots down, blows past your stop loss, and suddenly you're down, right? Or blows past your stop loss, then you lose even more. So do you want to play that game? Right? There's no right or wrong. It's just how much risk are you willing to take, right? And sometimes you can say, well, I'm just going to exit quickly. Well, sometimes if the number surprises, the market reacts so negatively or positively against you, then you can't exit clearly, right? A lack of liquidity in that market. Now, I will say to you, when I was younger, I would play these type of things where, it is a higher risk where, I get in a little bit beforehand, right? Before not even the non-farm payrolls, or get in before the Fed meeting, the FOMC meeting announcement, and then suddenly it shoots up in my favor, and then I make an easy profit, right? But quite frankly, that's a very high risk type of scenario. Okay, David has another question. Should I be taking my signals all the time, regardless of news, or is it better to wait for news first? Which is better for a professional trader? Okay. If you were to ask me as a professional trader or someone who has traded, for such a long time, and where for me risk is like super important. Like at this stage in my career, where I've been through its ups and downs, right? I've been in my 23rd, 24th year in terms of trading. I would always tell you, always try to minimize risk. So it's just saying, like, again, you get in before news, you get in before earnings, I play those games where I'm trying to predict what the company is going to report the next day, right? And there's been scenarios where, again, due to my stupidity or just due to my, high risk, is I go in aggressive right before earnings, predicting, last few quarters, they've, always positive. And then it just only takes one time where it doesn't work in your favor and you lose a lot of money, right? So would I play those type of games anymore? No, definitely not. It's not worth playing. It's like you're trying to predict. Now, obviously, sometimes it works, right? Like, let's just say I go in, and I have done this where I go in heavy, and the earnings was just say positive, and I bought in heavy, and I make a lot, right? Like 5 figures, 6 figures. But to risk that type of scenario nowadays, and again, it just depends on because the thing is, professional traders do not speculate. And I've been working with a few students and clients, and I tell them, I said, as traders, we're not trying to predict the markets. If you're trying to predict, you're kind of gambling. What a trader does, okay, and you can say a professional trader, what we try to do as a trader, especially as a technical trader, is we follow the market. Oh, the market's going down? Okay. We're not looking to buy. We're looking to short. Oh, the market is going up. Okay, we look to where to buy. It's as simple as that. We're not trying to predict. We are just trading according to what the market is telling us. Now, again, I have had a scenario where a student tells me, he says, why are you shorting? Why are you now shorting the market? Or why are you not exiting that position, that profitable trade position, where you could have exited a few days ago at this higher price? And the very simple question that I told him is, the market at that time was going up. Why would I be selling if it's going up? Remember, like this whole thing that I'm telling you to take, you shouldn't take profits early. How did I know that that was the peak? It could have went even higher, right? Now, obviously, again, you can use resistance level, all that stuff. But what I'm trying to tell you is that, as a professional trader, is that when the market stops going up and starts going down based on, again, the indicators or trend lines, all that stuff, right? Then I sell. I trade according to what the market is telling me. Okay, so that's kind of where. So that's why, if the market, let's just say you trade before news and you think it's positive news, maybe because of certain catalysts, but what if it's good news, but the market is not liking it? So then you're kind of right. You should just trade according to how the market is reacting to it. Now, obviously, in a scenario where, let's just say you didn't buy before the good news and the news was good and the market went higher, right? And you say, oh, I missed out that opportunity. Well, then look for opportunity where it goes down a little bit, right? So they can get in. All right. Okay, Dennis. Mike, I must thank you for the Turtle Trader system. I've been researching this trend following system. Thanks again, Mike. Yep, my pleasure, Dennis. All right. Richard says, well said, Mike. Yeah, thank you, Richard. Okay, so Dave was saying, I was referring to day trading in my questions. Okay, so I mean, it's the same logic where it doesn't matter where day trading or swing trading. If you're trading prior to news, again, are you comfortable with the reaction once the news comes out? Yes, you can say, well, I'm going to be quick, right? Well, okay. And again, you can be, but I have been in scenarios where the market reacts so quickly just because it was so surprising. It just slams and goes against me and blows past my stop loss, right? Or you say, okay, well, I'm going to play right before the news or play right after the news comes out. Well, suddenly shoots up, shoots down, shoots up, shoots down. Like, how can you play that? Like, it's very risky. Like, and one thing I'll kind of add to you guys is, as a trader, once you get into a position, all you're really trying to do is, okay, I'm in a trade right now. I want to protect myself. Where's the exit? Where's the exit? Right? You get into a room. Where's the exit in case something goes wrong, right? It's the same thing as your stop loss. You get into a trade and you don't have a stop loss and it goes against you. You're thinking, where should I exit? And then you can become emotional. You say, oh, I'll just take a small loss, and it becomes a big loss, right? So what I'm sharing with you is, before you get into a trade, you got to see where's your downside, where's your exit, where's your trigger. Let's just say, for example, let's just say it doesn't go against you, for example. You get into the trade in the news, you're thinking, it's not moving. So you get in, right? It's not moving. It's not moving in your favor. It's not moving in your favor. Okay, well, it's not moving at all. Exit, right? Because that was your trigger to get in. All right. Last question from David. I realize risk is too big since the trade can skip your stop loss, and blow the account. Better to wait. You make lots of sense. That's why I thought, but I needed to hear from a professional trader like you. Okay, thank you, David. So just to add a little bit more is, you're bang on. It's just, at the end of the day, has a trader, and again, I want to just repeat a few more things before I end the stream, is as a trader, we're not trying to predict. We're just trying to follow the markets. We're not trying, like we can never even do to our analysis, our fundamentals, our technicals, our intermarket analysis, looking at all the indicators, looking at history, research, all that stuff. Like no matter if again, watch some of my videos where I talk about some of these guys on Wall Street. You think they're like super smart. Yes, they are, smart, but the way sometimes that they approach things, it's not, they're not geniuses, right? No one can predict. So all you're really trying to do is, as much as you can possibly do your research, your analysis, once you put it out there, then the market can decide. Like in 2021 or in 2020 March, anyone would be a genius to buy at that time. Anyone, right? Or anyone would be a genius to buy, right after the financial crisis in 2008, 2009, right? Anyone, right? It does not take any smart person to get in at that time. Now, what takes a smart person, or what takes a very profitable trader, is to stay in the trade as long as it's making money for you. Okay? Can't predict the top. You can say, oh, if I held on to, I would have made $10,000. Now I only made $5,000. Well, if you kind of planned all in advance and you did all your, what I kind of things that I share with you, 5,000 is 5,000, right? You couldn't predict that. And then you could say, well, if I just held on for a year, I would have made, 100,000, for example. Well, was that your trade? Are you just looking to buy and hold it for a few years? Right? So you can't look back and say, oh, I should have, took the profit too early. Like, because like it's like saying you're a day trader and you exit with a $500 profit, but if you held it for a month as a swing trader, you would make 5,000, right? You can't say that, because as a day trader, okay, $500, hey, that's great. That was your target, right? So that's what I'm saying in terms of you, partly in terms of not taking profits too early. You got to know what your style is. For you to expect, for you to make a lot of money in day trading with such a small position, you're thinking that's going to go higher or lower in your favor, is not feasible when you're day trading versus swing trading or longer term, right? Because the position can keep going in your favor. All right, guys, thank you so much for attending today's live stream. I hope you guys enjoyed a lot of things that I shared with you. All right, so next week I am going to talk about, is trading profits, making a lot of money in the markets, is it luck or is it skill? Or is it just a combination? And obviously, you kind of know what my answer will be, but I will say to you, there is an element of luck in trading, just because it's all about timing. So I'm going to share with you with that next week. And so make sure you attend next week. I will delve into this topic a lot further. All right, guys, thank you so much for attending. Again, bring your questions. I'm here to help you guys master the mental side of trading. Take care, guys. Enjoy your Sunday, and talk to you guys next week.